have staples increasing or holding itself, and consumer discretionary would weaken. And I think a lot of this has to do with how strong that core retail sales was, and in general, how strong the US economy has been overall. And it's just holding that consumer discretionary better than you'd think. Also, Amazon seems to be holding up okay across the board, and that's a huge part of that market. Let's move over here to S&P 500 versus central bank liquidity. We're starting to come a bit more in line. You'll notice that central bank liquidity for the US, which is this green line here, that's been increasing a little bit. And this is what they do. They bring in a little bit of the guns without telling us, and then all of a sudden, what do we see? We see a little bit of support for the markets. US oil, we've had this one break underneath the trend line. It does look like it's going for that yellow line that we have here, which sits about 78.28. But I think USO is probably most interesting here. So if we pull up USO, which we'll just bring it on the charts, you'll notice that it's gone down below its daily 20 moving average, which I can tell you, not that I have it here on the chart, but it's about there. And we've closed below that point. We've also seen large trades through here. It's likely that the oil funds are going down. I think next up could be stopped for $68. And it does seem to be like that temporary run is over. And although we thought that US oil might be breaking out in the weekly, the problem with it is we're now below the long leg doji, and this just was so close to call. Now, if that had been a weekly close that was bullish, I would have gone with 92.90 all day. A lot of you were polled this week. We polled on our Monday stream, which we do every week if you're interested. And what we found was that no one had any idea. Basically, we were all like a quarter at where oil would go next. It turns out that it looks like it's going weak. And if it gets underneath 78.34 a barrel, then we're probably moving even further down. US dollar, this is super strong. This thing just doesn't want to stop. And it puts in another rejection off the wick here. There's no sign of turn at this stage on US dollar. It continues to strengthen. It's now hit pretty much my main targets. So, next targets would be somewhere around up in here, which would be about 103.50. And then the target after that would be 104.10 or so. So US dollar is very, very strong. And that's putting pressure because of this yield increase on 10-year as well. That's putting pressure on gold, which continues to slide. It's been sliding. I did hope that someone would find buyers around here for gold originally, but of course, once that got taken out, what can you do? Barrick also fell underneath, and of course, GDX has also fallen underneath. So it looks like it's going to be a slide for gold thanks to yields for a bit. There is a huge issue in here, which is basically an unfilled kind of massive gap that basically sits there in very low volume. So if we end up closing the weekly underneath this level, I could see gold actually move lower into the 1840s and even 1850s. And then all of a sudden we might find some significant buyers here. I like this zone quite a lot, but unfortunately with gold, it tends not to come really very good again until November. So it could be quite a while till gold actually finds its legs again. And that could be also coinciding with things like stimulus from China and other yield style situations from central banks. This is the one that a lot of people have been looking at, a bad close for Tesla. And frankly, it doesn't look like it wants to stop. That's a close on the low after rejection. And it just basically is trying to put in, you would think, that 200 to 210, which we've been talking about. It's possible we even go to 180. So for Tesla buyers, is it time to buy the dip? This is not really the candle that you generally say is an excellent candle for buying the dip. I would say it's probably going lower. But what do you think in the comments down below? Let us know. Apple, another new low as well, closes very similar to Tesla, and it closed underneath. Now, if you're an Apple fan, you want to buy this stock, we have a bit more structure here. If we make it back above about 180, 150, which I think is what is here, about 181 flat, then that would be significant. And I think that would probably mark the temporary dip. But at this stage, that's not a great candle. It kind of points towards further weakness coming. And we know that the back of August is the weakest period. So that's where, if we're going to put a low in, statistically, we generally do. So could we be seeing a flash sell throughout next week? It's possible. This is not exactly the candle you want to see. I will be watching Apple very closely. We all will together, and we'll be checking it out. Let's move over to NVIDIA. NVIDIA continues to reject this area. I don't really like selling NVIDIA at this time of year. I do like the idea of semiconductors being weaker, which they are. But Nvidia in general, the problem with that one is it has got earnings and it does tend to hold into earnings. In fact, usually it's something that I would go with the bullish side into earnings, but this year is a little bit different, as we know, with the statistics, with what we've seen. So it hit the 61.8 and sold off for 2 days so far. That is a weak period for it, a weak area. And, earnings is going to be probably what holds it up or brings it down. So I think this one is just waiting for that. Semiconductors across the board, though, were weak and they continued to sell. Now, even the little strong potential turns didn't really turn yet. We found here Disney just made underneath my box. This is where I suspected buyers would recommence for Disney. We saw a sell day, but now we get a little doji. We're looking for a break above that, and that's going to be hopefully the beginning of a little V. So it's not like a super solid trade. It's like what I'd call a 6 out of 10, but this is the type of position that I'd be looking for. And what I'd be looking for here is the beginning of a V. So remember, buying the dip is one thing, but that's a prediction. When you buy the V or you buy the turn, you actually improve your odds a little bit. So just keep that in mind. Hopefully that's a bit of a tip that helps some of you out there. ARK, I want to bring up hypergrowth stocks. They are getting absolutely smashed, but they're coming down to interesting zones. ARK's most traded level is here with a big range that could be bought through this zone. So could this be actually where the markets are going towards for a bottoming effect? Well, there's so many hypergrowth stocks that are making new lows. Just to give you a couple of ideas or a couple of concepts, if you take a look at PayPal, it came underneath the previous low and pressured it. And you can see here the weekly, look at that, it's pressuring that extreme low. We saw SE doing the same thing with the bad earnings. It pressured the low and then tried to pick back up. Huge volume trade there. Possibly there's some reprieve off those points. So many of these hypergrowth stocks are actually making right on the lows. And this is where stop loss gets hit, liquidity gets stolen, and all sorts of shenanigans happen. So we're watching those quite closely as this event unfolds. Utilities also took lows. So utilities is an interesting one. If it gaps up, it's got a little island reversal down here on the low point. And of course, 65 would mark, I think, a significant change for utilities to go to the bull side. So something we're watching, something we're looking at on the charts as well. CQQQ keeps coming under fire. A lot of selling in China right now. I still maintain that I still think September back end will be very interesting into October. I do expect October to be the time when they announce stimulus. We'll find out. I mean, basically, it's still the same technical analysis, the same concept, though it is getting brutalized at this point. So remember, it's not a trade. It's more of an idea of accumulation. We've seen some of the bigger investors coming into the Chinese market around these levels. So obviously they're starting to sniff it out. They're expecting, they will wait for the catalyst though before, of course, they pull bigger triggers. Let's move over to German 40. This market and the indices here is continuing to weaken. It's in line with our idea of Wyckoff. Of course, if we do end up taking this 15,400, we could be in for a more significant sell across all indices around the world. So certainly one that we're watching closely. The Australian market, the Australian ASX 200 continues to fall. I don't see too much reprieve or buying pressure here, especially when we think energy might be topping now based on the new analysis. And that could push us back down into 7,000 for the ASX 200. It started with a double top, it rejected, and now it's down here. So luckily we had a neutral to bearish idea on it. US 2000 hits a relatively interesting trade level. It hit a bigger one hit a big one the other day. The biggest of all is 1750. I mean, 1750 is a huge zone. That would line up very well with like a 4150 and 4200 on the SPY. And that would be what I would call like a really nice correction if it occurred. Here, no change of trend yet, just smashed straight into it. It is a zone where you could see some buying through this previous structure, but nothing at this stage. US 2000 hard to read. What about the NASDAQ? The NASDAQ's also on a demand zone. Big weekly level, big daily level. No turn at this stage on the smaller time frames. As we scroll through, we go to 15 minutes. We just got nothing. There's very little structure here. If you were looking for the next 24 hours, you'd probably wait and say, okay, well, I want to see it do this. I wouldn't mind if it did this as well, and then did that. If that happened, it would kind of point towards, okay, we can get a little bit of a reprieve rally. But at this stage, the trend is down. It's in demand, sure, but the trend is still down. S&P 500 smashes into our watch zone area. This is where we expect structure to start building. So we'd like to see the S&P 500 find some buyers, again, create structure so that we can make better informed decisions rather than being predictive and saying, oh yeah, 4,400, it's going to buy. We don't know that yet, and we don't have any information that says that anybody wants to buy it. It closed on its low. That's not exactly significant to, oh, it's going to buy instantly. Usually when it closes on its low, it means that rallies get picked up and pulled back first, or it keeps selling through, and then it might rally after it creates structure. So we're looking for that. Let's go to the US 500 in the futures to see whether we've got any yet. And the answer is unfortunately no. I wish we did, but we just don't have any structure yet. I will update you all over the next 24 hours if we do start to see structure. At this point, though, it's just hit into a key level. I think some people will have taken profit here. I don't blame them. And it's the first of the most likely zones we got to. Are we back to mean reversion? Are we back to any of those things? Some people are going to be asking. The answer is not yet. We still have a little bit of a way to go. And that's actually as a percentage for the S&P. We're talking about another 2% down would get us back to mean reversion, which for anyone that doesn't know is the 20 moving average on the weekly. And it's a pretty big level and certainly a very important area. And I'd say that would mark up around 43.30, 43.50, that kind of zone there. Maximum pain now, are we hitting it? The answer is yes. We are literally sitting right on maximum pain on the SPY. We also know that there's a bunch of puts and calls that have all opened everywhere, so that's made it a little bit more confusing here on this chart. But we've got 3 million almost units. We've got trillions of dollars of options expiration. We do not expect the market to be below 430. And of course, at the start of the week, we didn't expect it to be above 450. So 440 is a good little level. It makes it like we hit target. Now we look for structure. We look for the next move. If it does fall through 440 clearly, then it could go to 430 and then come back up before, I would say, expiration. At least that's a guess. What about crypto? Well, altcoins are getting smashed, but take a look at Bitcoin. It's putting in a bit of a sell here. And this is pointing towards that 27.5, 28,000. So it is pointing towards weakness and further selling here coming in the crypto world. So be a little bit careful there over the next 24 hours. It could be explosive should it actually take some of these lows. And I expect it to kind of, melt a few levels if that happens. It's been coiling for a while. The trend's been kind of down on the small time frames and up on the big ones. But Bitcoin could be coming back to the most traded levels. So it's looking weak here on the chart. Any other bits of information? Well, we've seen the FOMC meeting minutes. Now we get unemployment claims on Thursday. But really, the big news is over. Now the markets are really trading around options. Do we remember with OPEX, generally the Thursday is more volatile than the Friday itself. So that's something to keep in mind because, of course, that's what we're entering into. If you enjoyed today's content, remember to subscribe, smash that like button. Thank you so much for watching. We appreciate it very much. And to each and every one of you out there, I hope you're doing okay in the markets right now. It's tough out there, but of course, this is the expectation of what happens in August. And we usually get a double dipping event in September. Bye for now.